Welcome to the Trade Trends channel. In this video we're going to talk about moving average convergence divergence. Why we use this indicator, formula, examples and limitations. Moving average convergence divergence is a popular indicator created in the 1970s by Gerald Appel that may be used to detect trends and assist traders decide when to start a trade. In essence, MACD is a trend momentum indicator that calculates the difference between two moving averages. The MACD indicator converts the two moving averages into a momentum oscillator, making it simpler to visualize for the trader. MACD is calculated by deducting the long-term and short-term EMA's 12 periods. Exponential moving average emphasizes recent data items. It's also called the exponentially weighted moving average. Exponentially weighted moving averages respond more to recent price movements than simple moving averages, SMAs. The relative strength indicator indicates when market is oversold or overbought. By default, there are 14 intervals, and the numbers range from 0 to 100. MACD compares two EMAs, whereas RSI compares price change to previous highs and lows. Together, these indicators provide analysts a more comprehensive technical view of a market. A prolonged relative strength index above 70 suggests the market is overbought, but the MACD signals buying momentum is rising. By diverging from price, each indicator may signify a trend shift. The price may continue to rise as the indication falls, or vice versa. Divergence typically signals a reversal that never occurs, producing false positive. Divergence doesn't always predict reversals. It forecasts too many false reversals and too few true ones. False positive divergence happens when an asset's price goes sideways after a trend. Slowing in price momentum, sideways move or sluggish moving will lead MACD to drift away from its past extremes and migrate towards zero lines. Once the MACD goes under the signal line, it's a negative indication that suggests selling. While the MACD climbs above signal line, indicator is bullish, indicating that the asset's price will increase. Before establishing a position, few traders wait for a verified cross over signal line to avoid getting faked out. Reliable crossovers follow the trend. Whether the MACD crosses well above signal line after a short pullback in an uptrend, it's bullish. If the MACD passes below its signal line after a short move upward in a downtrend, traders consider it negative confirmation. Divergence occurs when the MACD lows or highs diverge from prices. So when MACD creates two rising lows and the price forms two falling lows, a bullish divergence occurs. When the long-term trend is positive, this is a bullish indicator. Some traders search for bullish divergences even when the long-term trend is unfavorable since they might suggest a trend shift. A bearish divergence is generated so when MACD creates two falling highs while the price rises twice. Bearish divergence during a long-term negative trend confirms the trend's continuation. Bearish divergences during bullish periods might signify trend weakening. However, it's not as dependable like a bearish divergence. Once the MACD falls or rises, quickly the shorter-term moving average pulls aside from the longer term, the security is oversold or overbought and will soon revert to normal limits. Traders utilize this research with relative strength index or other technical indicators to validate oversold or overbought circumstances. Investors often utilize the MACD histogram like MACD itself. Histograms show negative or positive crosses, divergences, and quick climbs or declines. There are temporal discrepancies between MACD and histogram signal, thus expertise is essential to choose. If you've got something to say about moving average convergence divergence maybe, or something you want me to cover next time, please drop us a comment, and if you like this video, I implore you to please make sure you smash that like button, subscribe and hit the bell icon, so that you see more videos like these. Thank you very much for watching, and happy trading.